Well, good morning, everybody, and welcome to Friday, November 22nd, 2019. I'm Andrew Horowitz. I'm one of the co-founders of TriggerCharts, the place to find the best indicators on the trading app store for TradeStation. I'm going to talk about that in a second. There's some things going on with the trading app store that I want to make sure that you know about. We're going to talk about a whole host of things, also your ideas, your thoughts, some of the stocks, some of the futures, maybe some of the ETFs that you want to talk about. So make sure that right down there in the chat that you actually put a couple of symbols in there for us to review to see what's going on. Before we go any further, I want to mention a couple of things. As you know, this is for educational purposes only, and it is simply a educational for understanding more about technical analysis, understanding about the markets, charting a variety of different indicators. It's not an offer to buy or sell any security of any kind, nor is it a suggestion or indication for you to either get long or short of anything. So with that and putting that out of the way, we have a few things to talk about. And by the way, thank you for joining us today. The audience is getting bigger and bigger each and every week on the live feed Fridays at 9 a.m. Quick note, and I think I have this somewhere listed in our notes, but next Friday, the day after Thanksgiving, we will sadly not be broadcasting. It is a partial day in the markets. We can take some time off to be with our families. Hopefully you do the same thing as well. So we're not going to have a webinar next week, but the regularly scheduled webinars will continue the week after. All right, so where are we? Got a little cough going on here. Sorry about that. So we have a trading store, app store update I want to mention to you. Something's not working quite right. We've gotten some word from our subscribers and those that are using trials that there's a couple of bugaboos going on. We're not getting information on when trials start, when they end, when people subscribe. They are fixing it. There's something to do with the database. I've spoken with TradeStation several times on this, and they are fixing this. So we'll get it under control. Don't worry about it. But if anybody's having any trouble right now, reach out to us. You can send us a note at info@triggercharts.com, and we'll do our best to make sure that it is taken care of. We also have a contact us page over on triggercharts.com, so you'll be able to put a support request in there as well. Well, it's turkey trading season. What does that mean? That oftentimes we do see that the seasonality coming into the end of the year is very positive for stocks. Putting aside last year's debacle and that incredible slowdown that we saw and the dive in markets in the second part of November through December of last year, culminating at a bottom, which was right on Christmas Eve, which was very painful last year. About a 20% top to bottom revolt of the buyers into the end of the year as the Fed was continuing on their rate hike situation, where they were continuing to say that we are on a pre-programmed course of increasing rates. Well, that didn't go over too well, as we know. And right after that, when they did in fact change their stance on it, well, things changed. So where are we right now? Again, we're getting into a shortened week next week. Holiday season is there. We have cheer. We see the lights going up all around town. Santa's going to be here in about a month or so, and Rudolph is going to take his sleigh and start passing out presents. And hopefully markets think that there'll be this Santa Claus rally, which will start in about 2 weeks. The concept of getting into year end, squaring up the books, closing down the shorts, getting ready for the next year, pushing as much as we can into the markets in order to get, well, the fees higher for mutual funds and institutional managers and all that. And that's what really goes on, a bit of a squaring up of trades, as well as making sure the books look as good as they can into the end of the year to seal the book so that the year itself looks really solid. If we don't do anything from here on out, it still looks great. Let's face it. The fact of the matter is that there's a wonderful year in the markets with the NASDAQ, the Dow Jones, even the small caps that are lagging, doing pretty darn well. One of the things I did want to point out in the chart that we're looking at on the right here is that we have a little bit of a trend line break. And I drew this very sharp trend line from the areas in the beginning of October through where we are. And you can see that the S&P has held up pretty well. This is the SPY, but the S&P has held up really pretty well when it comes to how the markets are reacting. And one of the things we know that trend lines are often there just as a guideline, nothing too serious here. It's only a price-based trend line. We like to use volume as a core of what we do. It's really much more important. But I kind of wanted to show you where we were just to show you the outsized returns and performance on the S&P this year so far, and particularly in the last month or so. So as we saw this trend line really hold pretty well, marking 3 or 4 different points on the lowest point of an uptrend. We're seeing that we did break it a couple days ago, come down. Right now, we see that futures are up 53 on the Dow Jones, on the S&P minis up 6, and on the NASDAQ Qs up about 19 and a quarter. We've seen some weakness in the last couple of days. Any strength is being sold, but still holding that 3,100 line on the S&P 500. But this is something to recognize and just to look at and just to take a understand that there is something there that maybe involves some further thought. Market timing indicators are breaking down. I think I'll show these to you right here. One of the things that I think is really important to notice here, and something that we can look at, is the fact that we are seeing the McClellan down on the bottom here of the left-hand screen starting to break down. We have 51 on first of all, on the new winners and the weekly highs for the, this is based on the NYSE index. On the top here, we see a negative 98 on the McClellan. We are starting to see this divergence happening right here. It's kind of interesting. You're starting to see the advanced decline line in the McClellan oscillator, which does a culmination of a 5% and a 10% and averaging. It does a variety of things, but basically what it's doing is telling us what's happening with the broad-based market condition. And even though we're seeing that there is a continuation of this upward move, we're seeing this divergence on the bottom here. That's something to be concerned about. On the Spearman indicator, which is just a statistical measure of the strength and where momentum is going, essentially, you'll see we're starting to roll over on the right-hand side a little bit here. Now, we saw this before, and we saw that there was this level that we noted. And let's kind of look, back over here, the rolls that happened, markets rolling down a bit after that roll happens. And as you break through that top line, especially when you have a significant high level, about 91, 92 on the Spearman indicator, what you do see is when those rolls happen, they start to happen pretty fast. Now, there's been many times that you see a little bit of a roll and it's just a momentary kind of dump down and then it kind of picks up. But what I wanted to show you was we are starting to see that come out in the prices as well. And what's going to happen here, oftentimes we do see the Spearman, especially when it's elevated for this long of a period of time, when we're talking about from mid-October through now, have to have a little bit of a reversion into the bottom end here. We do see that oftentimes getting through the zero line is really the problem, but breaking through the top on the downside, something just to be aware of. We've heard this week that there was what do we have here? We had the Hindenburg omen that was being spread around, that it hit again on the NASDAQ, and I think the Ohama Titanic syndrome. You got to get close to that, the Ohama Titanic syndrome. I mean, I'm not sure what all these things mean. They are predictors of market declines. They've worked before. The names are pretty darn scary, I'll be honest with you, but I don't know. I don't think there's really anything that is absolute about them, especially in a market that is really headline driven. Just this morning, markets were coming a little bit. President Trump was on Fox talking about that, hey, a trade deal is really close. Meanwhile, last week they said it wasn't. Probably won't be done until next year. There's a lot of things that are going on here, mixed messages from the markets that are taking it pretty well in stride. As a matter of fact, if we get back to this for a second and we take a look at what's happening, we are seeing economic conditions continually weaken, not only here but abroad. We see the Philly new orders was really negative and poor yesterday. Leading indicators, also the new order flow on that was very poor. Retail earnings have been mixed. We've seen this slam and bam. We're going to look at a couple of stocks today that are doing pretty well due to the fact they reported last night. A couple not doing so well as well, and some of those are getting just obliterated. The air is kind of coming out of the balloon on some of these retailers, some of the big box retailers in particular. Nordstrom's reported today, a little bit better, up their guidance for the rest of the year. That was really good to see. A lot of shorts in that name. Stock is moving up very nicely this morning. Williams-Sonoma missed sales on some of the key areas, and the stock is down. We'll talk about that. One of the things also that's interesting is a small cap consolidation. We'll show you a chart on that. I think that consolidation is really interesting. Oftentimes you see that markets want to play a catch-up trade. They want to actually move a reversionary point from one area to the next. This year is a really good example. Last year we saw that the markets came down very significantly, closed down about 8% for the year or something like that towards the end, 20% down at the end of the year. And what do we see? A major reversion back to normal levels of an 8% return on average long term for the markets. When you blend last year and this year, pretty much what you got. We still hear the relative highs, although we said that there's a little bit of a trend break right now. But the bottom line is that markets are really doing a fantastic job, just an absolutely tremendous job of digesting any bad news. Anything that's out there that seems to be bad is a momentary drop, and then it comes right back up. Good news is taken as, yeah, man, we knew that's good, and it really moves markets up pretty well. So we have end of year happening, and that Thanksgiving to end of year, Christmas rally and Santa rally, hopefully, as well as FOMO that's really playing a big part of the markets right now. Next week is Thanksgiving. Wednesday will be a full day. Thursday, I believe Wednesday is a full day. Thursday is not open. I think Friday is a half day, if I'm not mistaken. Inventories, personal income and spending, GDP second reading will be next week, as well as the Fed's Beige book. And we're going to talk about a variety of these stocks. So let's get right into it. As again, I'm going to put the word here over here in the chat so you see it. Put your symbols here that you want to take a look at. We will look at those very quickly, each one of those. We have plenty of time to do that today. I'll also mention something that's really important. There is a 10-day free trial. I will let you know that, again, I think there's something kind of funky and wonky with the trading app store right now. I believe it will be fixed by the end of the day today. But you can go over to the trading app store for TradeStation and pick up any of the trigger charts, any of the indicators, actually. Some of them are free, but you'll get a 10-day free trial on any of the ones that we're going to look at. So before we do that, let's take a look at this. So where are we on the KRI? KRI is a little bit overbought, just a 0.1. It's been spending a lot of time in the +2 range. We see that yellow kind of danger sign there, but nothing too terrible. Not as overbought as we saw kind of any of these times here. Clearly not in the oversold area. Oftentimes when you get these oversold levels, you get this real major ramp after the fact. You see that? And they start to come down a little bit. I think we're kind of in this range right here in the markets. We're going to see that roll down. Maybe not by the end of the year, but a little bit of a takedown moving forward. Get some of the extra froth and bubbleiciousness out of the market. I mentioned that we're going to talk about IWM. So that's the small cap ETF. And I really want to focus on, I'm going to zoom this out. I want to show you something really interesting. I've mentioned this so many times, I'm just going to really keep on reinforcing this. I like to use the box tool, take a look at where my levels are, and right about, I would say right about here. Those areas where we can connect a number of lines on the top end and the bottom end of our range. You can see that I'm connecting a bunch of reds right around the exact level, but again, we're going long term here. I'm connecting a bunch of the lines that I see on the bottom. Look at this incredible consolidation that we've seen the entire year 2019. Now, consolidations, usually what happens is like a spring coiling up, and when it breaks and when it starts to break out in one direction or the other, pretty significant. Now, I'll ask you, if you look at this here and you take a look at where we are on this, I mean, the consolidation looks like it is trying desperately to break out. I'm going to get rid of this box here, and I want to show you something. We're just going to take a quick line tool here and kind of draw this level here. And I'm going to zoom out even more. If you notice that there is nothing really in this range here, the above the, and again, I just quickly drew this, and it just really, you just have to draw the tops of any of these areas, and then you'll kind of get, so here, there's the area right there. So you kind of drew across, and we bisected a few different lines here and in areas of importance. And if you'll notice that above the range, and again, I'll take another box tool here, and what we'll do is just grab that real quick. In this range right about here, there's really not much resistance. The opportunity to try to get through here, it's tried a few different times but failed. I think the bet is on right now. If you look at this, kind of a bit of a flag pattern that we're seeing here, kind of the pole flag, and that usually is a continuation pattern to the top. Whether or not that happens, it doesn't look like there's a lot of resistance here, and we really focus in now on this. We have to get above this line right here, and we're kind of right there, but at the same time, there seems to be some reason why small caps, possibly hit a little bit harder by the trade war, is not really moving as much. You would think that the domestic companies in this area would do better. A lot of the banks are in this area. We have some of the biotechs and some of the healthcare and all that, but really there's a lot of local financials, or the regional financials, that are inside of this index, and that I think is holding it back somehow. But this does look like it is a coiled up level. I mean, we did see this breakdown very significantly in October. We saw the return and resurgence of small caps, but holding off right now. It does need to get through here. I do think that small caps is a good bet above 160 or so. You know, you may have the opportunity to see it up to about 162, 163, and then there's some congestion right about in this area here, going back to July of last year. But it does look like there's some momentum that could build very dramatically, especially if the reversion trade, if we start taking some off of the large caps and move it into the small caps, it could play out pretty well. JWN, I should say, sorry. This Nordstrom's, we'll make this a little bit smaller. Nordstrom's trading up about 9% this morning. An absolutely awful looking chart. This is the daily chart here. I'm going to bring this back a little bit. Right now, trading at what, 37.48. So where is that on our chart? Let's kind of mark that right about here. The high volume node from a previous altimeter. But if you notice, once it got above the level of about 35.5, it really had nowhere to go but up. There was some air in here, a gap down, which can be drawn right there. But you can see when we look from right to left, which is all important, everything that we teach you is to look left. It's really important just to scan from the right side of a chart to the left side of the chart. See where there's any holes. See where there's any of these fast zones, which are basically areas that we see vertical price moves through time that are very quick. And that's what we're seeing right now. We're going to open up right about here. You know, the potential is that we move up to about 38.21. Where do we go from there? Well, if you look at this again, just take a tool and just look. There's really nothing here in terms of any of these drawings. There's price there, but there's nothing there in terms of what we have allocated for a volume weight of price action in those areas. And really, that's important to notice. If you don't have any price that has any volume on it, that means there's no conviction in those areas, and the potential move, as we saw in this area right here, is very highly possible to move dramatically. I mean, you look at this and we see that right here, this move right here, very dramatic move off of the area where there was really nothing to speak of when we looked from right to left previously. So now what does that mean? Well, if we can get above this line, you know, the potential is for us to move very significantly back up through that area, probably somewhere into the 44 level. Now, a lot of things have to go right. Right now, the stock is trading at 8.5. A lot of shorts covering pre-market. Would I jump into this right now? From a trading standpoint, using a good amount of discipline, the reality is, no, you don't want to do that. You don't want to necessarily jump into something right on this unless you're trading short term. If you're looking for a swing trade, though, you know, you wait to see if, you know, you're going to get any kind of that support back to about that 36 line and then kind of see if it can boomerang off of that. The bottom line is that right now we are trading due to the fact that there has been such a long-term ugliness related to this stock. I mean, the stock is obviously trading pretty poorly for a long period of time. But I got to tell you, below the level of 43 looks like an upside opportunity. Then you're going to hit a brick wall. I mean, you can see it right here. There's a wall right here. You know, the upside or ceiling. Better look at it as a ceiling. It is clearly a ceiling on this level. MJ, some of you have asked me before, this is just outright disgusting. This is the marijuana stocks that were so up in excitement, and now they just got up in smoke. I mean, technically. When you look at this and you look at this trend line that we're seeing here, and this, I mean, this really, just look at that, just straight down. Now, we are starting to see that right about here, there's a little bit of a lift going on, got hit right on its top end. I'm going to clear this because I want to show you something and really zoom in here. That's not clearing. Clear. Back to my mouse. Got to click a lot of buttons to get this going here. We tipped right up into the high end. It didn't really get all the way there. About 1931 is really a lot of significant ceiling level upside resistance in this. Right now it's trading down about a 1.5%, right about 1830. You know, so about 1847 was some potential support off of that high from yesterday. You know, now we're moving into the 1830 range. You know, there's just a small amount of here. We have still an aileron that is showing a negative growth or negative momentum on the stock. It looks pretty bad overall. This could be just a quick and down and dirty, okay, let's see if we can get something out of it, and the traders fleeing once again. Not something, this marijuana index, which is the MJ, Alternative Harvest ETF, which is a representation of many of the stocks that are in the weed business. So I don't know. It doesn't you know, look like there is a great opportunity right now to get back into this, but we'll see. There's a lot of overhead resistance And to be honest with you, if you look back, it just keeps having a lot of overhead resistance. You know, you can see all, when you look left, all of these lines drawn. There's not an area that I can say, oh, that looks like a great area. Oh, that looks like a hole, a fast zone, an area that will see a vertical move through time in a very fast nature. What do we got here? WSM. I think we talked about this. Let me clear all these. Just cleaned up. WSM, when we looked at this, this stock, this is trading down a little bit today. The momentum was a little bit higher. You know, you look at here, there's some decent support, about 65 and change. Where's it trading now? It's 66. So I would say that's a reasonable level of support here, but there's just a little bit of wonkiness below here. Target on the downside is about 62 and change here inside of this general zone. So this was kind of an area, nothing major happening there. Tesla came out with, did you see that truck last night? The Cyber truck, or I call it the Cyber Suck. Awful looking. It looked like they just took panels that were laying around and just soldered them together. Whatever. Anyway, there is a new truck out for Tesla. Either you love Tesla, you hate Tesla, or you have no care. Bottom line is that Tesla's been on an absolute tear. Tesla has been clearly moving up from the bottom after their earnings report came out last quarter. Really positive. And what we're seeing right now is that this move that we saw up really has a lot of air in it. So you could easily see this thing come back to 318. I don't think there's any problem. I don't even think there's a problem coming back to the 280 zone on this. But if Tesla does continue, we do see that there's really good momentum with this. There is a lot of fanboys and girls out there actually trading down about 3.5%, 341 trading out. Let's see what that is. 341. Yep. 341, right below its level of support here. I would think they'll try to support it here. Potential downside, 318, if there was a lot of price action that was associated with the new truck that was coming out. AMD, another stock that's been just on a tear here. AMD is broken its trend line, looks just like the S&P 500. Has a couple new chips out. A lot of excitement in the semiconductor area, doing very well, even though there's some concern about the trade wars and what's going to happen with electronics on December 15th when the new tariffs go into effect, if they go into effect. We'll see what happens. I mean, I think we'll be right to the last minute on that, and then there'll be possibly a delay because President Trump is trying to keep some political capital in the areas of his most important supporters, and that would be one thing. The second thing would be, it would be on personal computer items, it would be on technology, a lot of retail items just in time for the holidays, freaking people out a little bit. That price will go up. So I think that there is a really good chance that it will be postponed or at least limited. But AMD is really seeing a big move. One of the things that you do see on AMD, once again, you just draw a simple line here, is that, you know, this is kind of your level. I mean, down to about 34 and change. Maybe even down to the top, a little bit more congestion right there. 34.45. We kind of look across here. Nothing in this area. When we see nothing there, and we do see one thing. There's a new altimeter being drawn here, but that could disappear, be blown out pretty quickly because there's really nothing to the left. Again, looking left, looking from right to left, it shows us that there really isn't. I mean, just keep on looking here. There's nothing here, this whole range. There's nothing in that whole range. And when there's nothing in that whole range, that means the opportunity to move down back to and test the area before we get some consolidation, then a bounce, you know, is very high. So I would look at this in a little bit of skeptical. They have to really perform pretty well. They have to do all the right things. I think this is really priced to perfection right now, and that's something that you really need to take a look at. Let's clear again. A lot of things, a lot of moving parts here doing a webinar. What else? Okay, I want to look at ROKU. ROKU, another one. Straight up from the 120, actually clipped about 116 in the pre-market as the earnings came out. Now the Disney Plus came out, and there is an idea that people that are installing their Disney Plus are also, in fact, getting it on ROKU. And when it installs on ROKU, what happens? Well, ROKU gets money from it. So I think what we're seeing right now is that there is this optimism that is built in. We see a consolidation. ROKU looks a little bit ahead of its skis, in my opinion, in terms of its recent move. But we haven't, you know, Roku's not a stock that hasn't seen these kind of moves before. We saw one here back in August. Again, a return back here in the beginning of October. Came back, very volatile stock. Play this on the insides right now. There is a level, I think about 158 and change. where you see some kind of level of resistance up to about 160.5. You can play that range until the breakout. Then you see a breakout. You got some more resistance on the high volume node inside the altimeter at about 163. That shows on the right-hand side here. 170 top end. 173, excuse me, about 173. I'd play this for kind of the range bound. You see momentum has picked up here, but the stock is loved right now. Did roll over a bit yesterday, but all things equal, it's doing pretty well. SPLK, SPLK, saw earnings come out up about 10% at the 137 range, which is way up here. You'll probably see this try to hit the 138 and change number, do its opportunity, or see its opportunity to break out, and then you may see a little bit of a drawdown from there. Anything else? Oh, yeah, I got this. Pure Storage Digital going to trade down to 15, which is right about 1581. Right there, and you can see that's where that congestion zone is, where we have a lot of lines that come together here. Earnings came out, missed its numbers. Let's kind of go back a little bit here. Yeah, you can see that it's going to break down right through his hole right here. I mean, that's clearly what we look for, right? The opportunity for it to break down. There really was a little bit of congestion. I would have said that, hey, play for about the 18 level. Clearly, a lot worse has happened. Right back down to where the consolidation was, right in this area here. And you can see that that is an area that there was absolutely, look, I mean, just look. Look at this. What do we say? There's a hole there. And that hole is meeting its level right now along that hole. So something to be aware of. It was a decent short opportunity, I think. You had some, I will say that also you had the opportunity, if you want to play this long prior to earnings, if you felt like doing so. Clearly there's a top end here, a little bit of range, but you know what? You're playing for about 21 there. Lot of lines that come together in the altimeter. Volume-based price that come together right now. Real quickly, let's look at FNV. We'll have this also recorded if you want to replay this over on the YouTube channel for TriggerCharts under the webinars playlist. So you can make sure to see that. And as I said before, if you want to have any information, there's a 4-hour course that we're giving away for all new subscribers. If you have that, just contact us, info@TriggerCharts.com. Make sure to tell your friends as well. Comment below. Do the like thing in the TriggerCharts or the YouTube. You could also go over to TriggerCharts.com. Tons of educational material there. So I want to make sure you know that. FNV, Franco-Nevada Corp. Looks like a good chart. Looks like there's a lot of support here about the 95 area. Who's this from? Dean. This is in the 95 area, currently trading at about $98. We have a good momentum on the upside here. Looks like there's a couple of peaks going on that really can't get above. I would say that you have some decent support about the 96.50 level. Below about 94, you got some trouble because there is some area of just a hole here that you can get back down to 90. If you're a long-term holder on this, the chart looks pretty good. What you have is also an upside move, a consolidation pattern that could return to the breakout area. We have another one here. Yeah, Valero, look at that. I mean, we saw that some consolidation in this for a long period of time. This is what I was talking about when I talk about consolidations and then the kind of the spring getting coiled up and then a breakout happening after that. You do see that there is this consolidation right here. And then once it finally broke out and got above, I mean, it really ramped. So right now, 94.5 is probably your number. The breakout attempt is happening right here. You have all the way up to, I would say, let's go back a little further here. Wow, look at that. This is a little bit tough, this chart, because it's a little bit concerning in terms of the lack of any air, anything going on over here, or the hole that we have here. This is just a giant cavern right now. So you are holding pretty well in the 96.70 area. And then if you do actually get to that support point, and then from there, I do see potentially moving to 105. I'd be concerned, back down to the area of about 90.5. Probably if I was to be working this, I would look for a pullback into that area and possibly look to reinitiate that position. I want to thank everybody for joining us today. We'll be here not next Friday. Remember, not next Friday, but the Friday after. Make sure to tell your friends to tune in. 9 a.m. is Fridays on for this webinar. They can sign up over on TriggerCharts.com for the webinars in the future. I want to thank everybody so much for joining us. We kind of ran out of time here today, but we'll talk to you again next time. And I do appreciate you stopping by and spending some time with us today. See you next week.